Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. In mid-November last year, the market broke down and out of the combination of the mid-September to mid-November 2023 descending triangle, as well as breaking below the neckline currently at 235 of the June to November 2023 head and shoulders top. This leaves the often previously mentioned singular big picture item, the big bear channel, currently 222 to well off the bottom of my daily chart. This bear channel is highlighted in dark blue on my daily chart and originates from June and October 2022, so it's coming up to 2 years ago. Since the low in March, the market has staged a gapping move higher, admittedly due to changeover, but still a gapping move higher. And that has risen up through the short medium moving average, currently at 207, and is currently testing the resolve of the declining medium moving average, currently 215. And probably more importantly, the key 50% absolute Fibonacci line at 219. Now we could look at this action as starting to slow and maybe halt because of these two resistances and the nearby declining upper bear channel line in dark blue. Or we could look at the action over the last few weeks as being a build-up to a possible bull flag, one that could easily challenge the overhead declining long moving average, currently at 228. Which will it be? As yet I am not sure, but I would look at the large amount of overhead ammunition we have from the previously mentioned head and shoulders top seen last year actually, as being a significant factor in capping any rises. But I will keep an open mind. By the end of April, the dark blue upper bear channel line will cross the 50% absolute Fibonacci line at 219 at what would then be at its most strongest resistance point. After that, they will separate and their individual strengths will not be as strong as their combined forces. So that will be a point and a time to watch for. Minneapolis wheat. Back in late February 2023, especially at the start of April last year, so that is now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what we now see highlighted in dark blue on my daily chart, a descending expanding wedge pattern, currently 744 down to well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced and has been for some time by the declining long moving average, currently 744. Then in early December last year, the overhead declining short medium moving average, currently 665, highlighted in dark green on my daily chart, started capping prices. In truth, this moving average had been an effective cap on the market since October 2023, not tested but effective nonetheless. At the end of December, prices gave up testing the overhead short medium moving average and headed lower, finally punching through the support, which is now resistance, between 693 to 708, dropping down to the August 2018 high at 650 and a January to March 2021 congestion area. Yes, a congestion area from 3 years ago. A congestion between 625 and 650, which is where we are now and have been more or less since late February. This also fits in with three other patterns I spotted nesting like Russian dolls, one within another. 23 weeks ago I said the following of the first pattern, I quote, "It is the nascent late August to date bear channel highlighted in bright red on my daily chart, currently at 555 to 698. This pattern is still operational, and once again I note how we have a smaller bear pattern nestled within a much larger one like a Russian doll." End of quote. This pattern is still alive, though we've not really had any tests of it, below or above. The next pattern is highlighted in purple on my daily chart and is the October 2023 to date bear channel, currently 611 to 698. This one has seen some touches and the market has recently been close to the lower trend line, touching it 6 weeks ago, but rejecting it back up at the same time. I would also note here how the upper trend lines of both patterns are at this time intermingled with each other, thus mutually reinforcing, plus we also have the declining medium moving average, currently 690 nearby, adding further to the reinforcement. The final one is the most recent and is the late December 2023 to late January 2024 bearish shift pitchfork, a pitchfork inspired by the actions in other wheat markets. During the last 8 weeks, prices have tested and penetrated the lower tie, highlighted in bright green on my daily chart. That's currently at 614. And in very recent times, the upper tie, currently at 642, pushing up and over this one, but also not moving away, and instead running along the top of the upper tie. However, as I said last week, and I quote, I am not sold on this move higher, not yet, much as I am not sold on the move down in late February and early March. Was not sold, I should say. End of quote. I will again finish with my final thoughts from 6 weeks ago, as they are still valid, and I quote, all these patterns are bearish, and they are giving varying opportunities depending on what time horizon you might be interested in. For the moment, continue to keep an eye on that 3-year-old congestion below between 650 to 625. End of quote. London UK feed wheat. One of the key features on my daily chart here, and it is a surprising feature, has been the extension of the neckline of the May to June 2023 reverse head and shoulders bottom, currently at 190.05. This was not a very notable pattern, a mini head and shoulders pattern if you will, but the extension of the neckline first acted as a pretty reasonable support and then later as an additional resistance, though I suspect in the background the September 2021 low at 181.70, and perhaps more importantly the 50% absolute Fibonacci line at 180.5 had helped in the past to prop up prices, and now this year to cap prices instead. Please bear in mind, if we see any fresh attempts higher, especially that, if we see any fresh attempts higher. In the bigger picture, there's been a double bottom during February and March. The prices had moved up through the old congestion from March to April 2019 between 161.95 and 165.75, as well as the July 2021 and May 2023 lows, both at 164 even. The August 2020 low at 161 as well. The market has already reached the target area for the pattern in the 170 area and is now hesitating under and around the mauve highlighted slowly declining medium moving average, currently 172.35. This medium moving average has been an effective cap for the market since about late 2023, becoming more significant as we headed into December 2023 when we last saw it really tested prices in recent times. The question now is what this hesitation we are seeing under and around the medium moving average, what will it become? Will it become a capping and topping action, or a halfway hesitation for a move higher? Or as I noted this week looking at it, does it have elements of a sideways triangle? It's still too early to say just yet. Just be mindful of the 2019 base congestion below between 165.75 and 161.95, and the base of the double bottom below at 154 even zone, plus the long moving average overhead and the 50% absolute Fibonacci line at 180.5, and the low of September 2021 at 181.70. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftbeek and ADM Investor Service International Limited. And here comes the final important bit.